Hello my dear friends and welcome to Grand Capital. I'm Dmitry Karlov, senior trader with daily fundamental analysis. So today is March the 14th and let's take a look at what is happening around the major currencies as usual. Well, the dollar was firmed against the euro after data showed that output at Eurozone factories fell more than expected in January and that production in France and Germany slipped. In the latest sign, the bloc is struggling to emerge from recession. The pair Euro USD is exchanging at 1.2978, down by 56 pips as Eurozone industrial production missed the mark and increased negative sentiment toward the Eurozone as the financial crisis and recession looms longer. On Tuesday, comments of Germany's Bundesbank that Eurozone crisis was far from over. The euro fell and has remained under pressure following the release of disappointing industrial production figures from the euro area. Back to Italy. Italy's second debt auction since the downgrade from Fitch has also been disappointing. So far, among euro area economies, Italy still has the largest debt. So headline risk is high heading into Thursday's meeting of euro area leaders and Friday's meeting of euro area finance ministers amid concerns over the French PM Hollande's request for relaxed financial targets. United States retail sales reported well. Reported well about forecast surprising markets as many traders expect retails to miss the mark due to the increases in payroll taxes and the anxiety over budget cuts in the United States. The 1.1% retail sales advance exceeded all projections in Bloomberg. And the island, Great Britain. This pair is trading at 1.4955. Per GBP USD, gaining 53 pips as traders took advantage of low prices to grab up the pound on the cheap. The weakest currencies of 2013 struck a small fight back on this morning as both the dollar and the euro suffered. Sterling led the charge, climbing 0.4% against the United States dollar to 1.4957 and 0.6% against the euro to 0.8687. The pound has lost 8% versus the dollar so far in 2013. Market watchers said that though there was little doubt, the market was very short. Selling is probably needed more time to digest the recent big moves, and clients will look to sell into rallies. Tuesday's industrial production figures have generated a considerable backlash towards fiscal austerity in the UK, raising the risk of losing of fiscal targets. So this is the major risk for the United Kingdom, given the recent sovereign downgrade from Moody's and the rising potential of loss of its AAA rating from Standard & Poor's and Fitch, both of which hold a negative outlook. So it's under pressure, pound is under pressure. Rating agencies have cautioned that the relaxation in fiscal austerity would raise the risk of downgrade. Japanese yen surprised all traders, showing a bit of strength on Tuesday afternoon and continuing into Wednesday morning trade with the Japanese yen 29 trade at 95.78 after moving well into the 96 sharp range on Tuesday. Speculator bought the currency at recent record lows. Mr. Kuroda said earlier this week that he would call the emergency meeting of the central bank to start changing policy immediately and not wait until the next meeting in April, moving quickly to follow the desire of the new prime minister. And Japanese yen remains weak as further monetary stimulus is guaranteed. Gold, back to gold by the end, and gold edged up a bit today on trade as 1,597.10, gaining $5.40 ahead of next week FOMC meeting. Gold rallied to near 2-week high in European trade on a combination of bargain hunting and safe haven demand amid fresh concern about the Eurozone crisis following disappointing data on factory output. What really had happened. The metal hit its highest since February 28th at 1,598.20 on Tuesday, but the bones ran out of steam due to pressure from an improving economic outlook in the United States. At the gauge of investor interest, holdings of SPDR Gold Trust, the world's biggest gold-backed exchange-traded fund, fell for a fourth straight session to 1.3 million tons on March 12th, its lowest since October 2011. So the outflow this year of 114.51 tons has more than wiped out last year's inflow of 96.25 tons. With economic data sparse during the week, the next major event is United States consumer inflation data on Friday, which is likely to provide some direction. Maybe we'll see it and pay attention. So investors will also watching a policy meeting at the Federal Reserve on March 19th, 20th to gauge the central bank's attitude towards monetary stimulus. Well, pay attention for these two. Not even investors are interested in this event. Well, for today that's all, and more details you can still find on our site, www.grandcapital.net. Was glad to see you, hear you, and make you an kind of analysis, and goodbye till next meeting.